Marginal costing. This is chapter 14 of Cost and Management Accounting, CA Intermediate. Marginal costing is a technique of ascertaining cost by management to have managerial decisions. Let us understand what is marginal cost. Marginal cost is incremental cost of producing one additional unit is called marginal cost. It is nothing but variable cost which increases for every increase in output. So variable cost again means it is a direct cost. See, what kind of cost changes by change in output is behavioral cost. If you recollect chapter 1 where it is clearly mentioned, behavioral cost changes by change in production quantity, level of production quantity. So what are behavioral costs? Variable costs and fixed costs are behavioral cost. Fixed cost remains constant up to certain level of production or turnover limits, while variable cost changes for every change in production quantity. So more precisely, marginal cost means direct cost, direct expenses and variable overheads. These both put together you get marginal cost. So when you identify marginal cost, you will be able to do the marginal costing. Okay, marginal cost I will explain with an example for more understanding. So in the given example, if you see, we have made a comparison of two levels of production quantity. One is 10,000 units, another one is 10,001 unit. Direct material per unit, it remains same because it is variable in nature. Per unit it remains same because it is variable in nature. So 10 rupees for 10,000 units 1 lakh, whereas at 10,001 unit it is 1 lakh 10 rupees. Similarly, labor cost 8 rupees remains same per unit, but it changes with the change in production quantity. So 80,000 at 10,000 units and 80,008 rupees at 10,001 unit. Variable overheads, which is 2 rupees per unit. Again, it is variable in nature as the name itself describes. It is 20,000 rupees at 10,000 units and 20,002 rupees at 10,001 unit. For every increase in 1 unit, the variable cost, that is direct cost and variable overhead, is increasing because it is variable in nature. Okay. So, but coming to fixed overheads, it remains constant irrespective of the level of production up to certain level. We cannot say this is also, suppose if you are producing 1 lakh units, it cannot remain same at 1,50,000 rupees because we will require more production machinery, more electricity, all these things. So at even fixed cost is, though we say constant, it is constant to certain level of production quantity. Okay, so now in the example 20 rupees is marginal cost, and now we'll understand what is marginal costing. As I said, marginal costing is a technique of ascertaining cost on the basis of variable cost. Variable cost means again it is nothing but marginal cost. Okay, now under this method the inventories and cost of production or is valued at variable cost only. Okay, so this direct cost and variable cost is almost one and the same. It synonymously used. Okay, but we have to understand certain activity level costing here. Okay, this I will explain in the next slide. Before we go into the example, let us understand what is differential cost and incremental cost. Differential cost means it is increase or decrease in cost due to change in production quantity. It may increase, it may decrease depending upon the change in quantity. But in case of incremental cost, it is increase in cost due to change in production quantity, increase in production quantity, or different process also. See, there may be various processes to produce a particular product. Okay, if we change the process, there may be change in cost also. Okay, then only the incremental cost defines only the increase in cost for change in production quantity or process. Okay. Now let us understand whether incremental cost and marginal cost is one the same. It is not exactly, because incremental cost is for one unit or for total volume, but marginal cost, it is only for one unit. Okay, this is the important difference which you have to remember. Incremental cost, it is cost incurred for one unit or one production level or total volume. Okay, but in case of marginal cost, it is one unit only. So let me take you through the example with which we have taken earlier. We have added couple of 2-3 additional parameters for understanding this particular concept. So in the given earlier example also, 10 rupees was marginal cost of direct material, 8 rupees direct employee, and variable overhead 2 rupees. Now to understand this concept of incremental cost and marginal cost, there is a machine setup cost which is 1200 rupees for every production run. Okay, now each production run can produce 100 units. Okay, now in the given example, for 10,000 units it is 1,20,000 rupees, because 1200 into 100, because we have to take 100 runs, so it is 1,20,000 rupees. But when I am increasing one unit, the production run has to be considered completely, because you cannot reduce the production run, the machine setup cost, because it will, whether you produce 1 or 100, it remains 1200 rupees. The cost is constant till there. So this you will, by even though you are producing one additional unit, you have to spend 1200 rupees. Okay. Now next, coming to depreciation and apportion fixed assets. These are fixed cost, both are fixed cost. One is at production level, one is at department level. Apportion fixed cost like administrative salaries, all these things comes under production fixed cost, and there are department level fixed costs. It will be apportioned across the production runs across all the departments. So it has to be, it is constant irrespective of how many production runs are taken. So in the given example, 1220 rupees, though you may feel it is marginal cost, it is not marginal cost. Only 20 rupees is marginal cost, and 1200 is it is incremental cost, because that particular cost is not changing by change in output. We can otherwise say that 1200 rupees is marginal cost of production run. We cannot say marginal cost of a unit. Okay, that difference you please note it. Okay, now let me summarize with what are the characteristics of marginal costing. Now let me explain what are the characteristics of marginal costing. As I told, marginal costing is based upon variable cost, that is marginal cost of production quantity, okay, additional quantity. And marginal costing does not include fixed cost of production, because fixed cost is constant for certain level of output. Even semi-variable cost will be divided into fixed and variable, and then accordingly the marginal costing will be decided. And sales and marketing expenses, though variable in nature, should not be considered, because this is indirect cost. That is very important. Only direct cost will be taken here and not indirect cost. Okay, though it is variable in nature, it should be treated as it should be debited to P&L, and it should not be considered as a variable under marginal costing. Even the cost of the product and inventory, finished goods, work in progress, everything will be calculated on the basis of variable cost. Okay, and the product profitability of departments will be also arrived on the basis of contribution margin. We will learn contribution margin ahead videos. This is very huge chapter. Cost, volume, profit analysis is very important topic. Okay, and prices are also determined under this method. Prices are determined on the basis of marginal cost. This is the marginal cost and marginal costing. We will see more videos on this chapter. It is very huge chapter. See you again. Thank you.